A derivative is a financial contract whose value is based on the performance of an underlying asset like stocks, bonds, or commodities. The name comes from the fact that the contract derives its value from something else, rather than having intrinsic value itself. The market for derivatives is massive. It is used by major institutions to hedge against risks or to speculate on price movements. These contracts come in many forms, each serving specific purposes for managing financial exposure in volatile markets. While stocks represent actual ownership of a company, derivatives are just side bets or protective measures linked to market prices. Most activity isn't just gambling. It is primarily used for hedging, which acts like insurance to protect against sudden price drops. Because they often involve leverage, small changes in the underlying asset can lead to large gains or total losses very quickly. Derivatives can be complex. Always understand the underlying asset before considering these instruments. Thanks for watching and subscribe for more basics.